I think self-storage found me. I didn't find self-storage because, as you mentioned, it's not attractive. These are metal boxes on concrete slabs. They're looking for a place to store their stuff that is close by, that is neat, clean, safe, and secure. The quicker and the easier you can get them to make that buying decision, that's how you win. 120 grand a year and some extra money. You get 2 facilities and you're sitting at 240. Was that enough to bring somebody home from work and not collect a W-2 anymore? Maybe, maybe not. When you get to 3, then maybe that is. When you get to 5, that's when it becomes a business. Self-storage has the lowest loan loss rate and the lowest loan default rate of all commercial real estate. If you're not doing well at it, you either pay too much for it or you take your hands off the wheel. You got to be a student of the industry first. Grab a partner if you're struggling or if you recognize that you have that blind spot. But at the end of the day, you got to educate yourself before you just jump in.
I love bringing on different opportunities for people. This is something I've kind of pondered about myself, exactly what you do. So give us a little intro into who you are, what you do, and let's dive right in.
Thanks, Kirsten. So good to be here. I've been watching your stuff and I'm looking forward to our chat today. As you know, if you poke around on the internet, Scott Meyers is affiliated and associated with self-storage everywhere because that's all I do. We've been at it for 20 years and we've been investing in self-storage, buying existing facilities, converting industrial and other types of buildings into self-storage and developing from the ground up. And then just a few years after I got into investing and building self-storage facilities, we started an education and a seminar business. And so we've taught a fair number, safe to say hundreds of people how to launch and grow and scale their self-storage business over the years. So yeah, we're all over the United States, not in every state, but from coast to coast, and also looking to do some investment internationally now that we just started within the past 2 years as well.
Cool. Okay, let's dive into that because I don't want to say it's a popular way to invest and make money, but it is a really appealing one that I think people might have misconceptions about. It might sound like, oh yeah, just put some money into a storage unit and make millions of dollars. So maybe give us a little insight into what called you to it, how you got started, and kind of guide us through that if we're in that starting point too.
Sure. I think self-storage found me. I didn't find self-storage because, as you mentioned, it's not attractive. I mean, it's not sexy. These are metal boxes on concrete slabs. And when I began looking into it, it was really at the urging of my wife because we were in the tenant and toilet business. We started out fairly small. We had less than 100 houses and we had about 500 apartment units. And we just realized that we didn't really like the tenant toilet business. And the freedom and the cash flow that we thought we would have when we bought all of the systems from the gurus out there, it wasn't there. Neither was the cash flow. And the tenant toilet business, until you get to really a critical mass and get some economies of scale and be able to hire a management company or management companies, you're still stuck with doing a lot of it yourself. And what I found, Kirsten, is both of us, we kind of started growing tired of our fellow man, if you will, and woman, because they were not paying rent, which is stealing in my book, no matter how you slice it, as stealing. And when they destroy your property and the courts call it, excessive wear and tear and don't charge them back for that. When I realized that, all right, this recipe is just broken. There doesn't matter how great of a chef you are. It just sucks. And so we decided to get out, but we love real estate for all the reasons that everybody loves real estate. And that is because we can borrow money to buy it. It appreciates and we can force that appreciation. It depreciates for tax purposes. And you can put a renter in habitational real estate or other forms of rental real estate. They pay down your basis as well. I mean, there's no other investment that has those benefits. But if you don't like tenants and toilets, there's parking lots, vacant land, and self-storage. Well, parking lots, you can't really create value in it. And vacant land, well, we do. We build self-storage on it now. But yeah, when you buy an existing self-storage facility, the ability to ramp up rates and raise rates whenever you want. If they don't pay, you lock them out and you sell their stuff off. If they don't pay you and you recoup your money. And then when somebody leaves either on their own or if you have to go through the lien and auction process, we just blow it out with a blower at the end of the day, wipe down the walls. And, in 15 minutes, we move to the next person waiting in line. So for all those reasons, we said that we saw the light and said, okay, what's sexy? Cash flow is sexy. So it doesn't have to be, we don't have to be in multifamily or class A multifamily or we invested in office buildings. We were investing in warehouses. We did have parking lots for semis. We were investing in just about everything, cold storage in real estate, but self-storage, the model, you can't beat it. You just can't beat it. So that's why it's becoming so popular, as you mentioned.
Yeah. So where did you guys first start? Did you buy something that was already built and established? Did you start with developing a property on your own? What do you recommend is the best place for people to start? And typically, what amount of cash are we needing to have on hand for this to get going?
Yeah, so we were already fairly savvy in commercial real estate. We had office buildings and warehouses, and we had multifamily. But lenders, our banker friends, regardless of what pivot you're making, whether it's a lateral or moving up the ladder, if you haven't done it before, they tend to not want to give you a lot of money or the maximum amount of LTV on a loan. And so this being our first self-storage facility, the same thing, went to our current lenders. And they said, well, you've never done this before. And I was just like, give me a break. We've done these apartments. We can do this with one hand tied behind our back. This is a simple, easy, predictable business. But they still wanted somebody else, or they were going to offer a very low LTV. So we got a partner who was also in commercial real estate, had a stronger balance sheet. They also, our partners did not have experience in self-storage, but was a commercial broker. And so had experience in commercial real estate. So it was a traditional loan, if you will, that we had at the time. This is back in 2005, 75% LTV, 25%. And we just split that, the amount of money that we had between the partners, and we put that money in. And we're off to the races. That's typically, and I want to say that is typical. That's kind of a typical type deal. You're going to have 65 these days, 65 to 75% LTV loan, and then you've got to come up with the capital. Since then, we've been able to, with the growth that we have, we begin to syndicate our projects and bring in private equity, just because you run out of cash eventually. And so that is what allowed us to be able to grow. And so depending upon the size of facility that you're looking at, and how many and how quick you're looking to scale, eventually the folks that are out there getting into the business will have to learn the art and the science and the craft behind syndicating and bringing private equity into your deals.
Yeah. So staying kind of down at that basic level, let's just talk through some of the things you want to look at and be aware of when you are choosing a self-storage facility. Like,
Yeah.
what do you, I guess even before that, what do you see when things are for sale, when you see those storage units for sale? Why do you think that is?
Yeah.
Why do you think people get wrong, and what are they doing to essentially not have a profit that they're even willing to sell
Yeah.
those facilities?
hmm Well, that's making the assumption, Kirsten, that they're not making money, and that's not always the
Mm,
case. People sell
true.
property people sell self-storage facilities for all of the same reasons that they sell any other type of property. Death, divorce, bankruptcy, they're trading in, they're trading up. They got a 1031 tax deferred exchange. They're going to get into a bigger property. They've already depreciated this. They've owned it for 25 years. I mean, you name it, just life changes and things causes people to sell real estate. There are, in those instances, however, when there's somebody that's just like, geez, I can't make this thing work, or, I'm just tired of trying to make it work. Typically what we find is that they're just flat out lazy. They didn't do
Mm,
anything. They just bought it, and it was a set it, forget it business, and it threw off cash until maybe it didn't. And the rest of the competition caught up, or their insurance went up and utilities went up, and the rates may have gone down a little bit with competition. And so they just decided to sell at that point, or they didn't have enough reserves saved behind. I mean, these are the unsavvy owners that, they stripped every last penny out of the property, and they never saved money for the new roof or the
mm-hmm.
driveways or the software or their security systems when they went out. And now they're faced with a big, capital expenditure, and they decided, nah, I'm just going to sell it instead. So there's a number of reasons why people sell. But I would say the reason why, if they're selling because it's not performing, it's typically their own fault. This self-storage has the lowest loan loss rate and the lowest loan default rate of all commercial real estate. I mean,
Wow.
it is a simple, predictable business model. If you're not doing well at it, you either pay too much for it, or you took your hands off the wheel, and they're not minding the business.
Hmm. Okay. So with that being said, knowing most of them that are for sale are probably not because it's not necessarily working,
Right.
knowing that it has such
hmm
a low failure rate. So what
hmm
things do you want to be looking at? How do you start to even begin crunching numbers to
Yeah.
know what your profitability will be? Because
hmm
you are obviously very smart, you know your stuff. So for the basic
hmm
listener
Yeah.
who's never really heard some of these terms before, let's
Yeah.
let's break it down in a 101 class.
Sure. Well, the market itself is kind of a self leveler in terms of the playing field, meaning if it's overpriced, then it's not going to sell, and the lender's not going to lend on it. This is
Mhm.
an income producing property, so we value this a little bit different. I mean, it is commercial real estate. So most commercial real estate is evaluated that way, which means that we look at the net operating income at the end of a year, and we divide that by a market capitalization rate, or a return on that investment, and that gives you the value. So if it's, bringing in $100,000 a year in net operating income, just for example, in easy round numbers, and you divide that by, an 8 cap, depending upon where the price is. If it's below that valuation, then you're going to move forward with it. If it's higher than that, then the seller has unrealistic expectations, and we just
Mm.
tell the seller, hey, you're too high. I'm not trying to steal your property, but your debt service coverage ratio is at 90%. It needs to be at 1.25 for any lender to look at this, and so I'm not your buyer. So if you're willing to come down in price or build value in it, a little more value in it, and get your net operating income up, then you can call me and I can give you this price. But I'm not looking to steal it, but the numbers have to work. Well, it's fine. I'm just going to wait for a cash buyer. Okay. Well, anybody that's got that amount of cash probably got it because they're a smart investor. They're not going to pay the price you're asking for your facility. So we just gently educate these folks, but it really, it just boils down to it is just a math. It's a math problem that
Mm.
we work out, Kirsten. And that's, some people have a higher return on their capital that they're looking for. And it also depends upon the property. There's many properties that if it's trading at truly selling at, say, an 8% cap rate, at today's interest rates, and the market rates, the rental rates are at the top of the market, the occupancy is at 95%. There's not many ancillary income streams that you can put into it. So in other words, it's not a value add. I'm not interested in that. But
Mhm.
there's a whole lot of folks that would be, just because they get the tax advantages. It's better than, putting their money in Wall Street and, with it going up and down like this. And it's a hard asset that they can invest in. They can still build value into it. For us, we need to have either a higher cap rate going in, capitalization rate, or we need to be able to build value into it. The rates are 20% below market and it's only 60% occupied. And they haven't added, truck rentals, and they're not selling locks, boxes, and moving supplies, or selling renters insurance. There just has to be a significant value add for us to get interested in it. So that's a
Got
long-winded
it.
answer to your question, but does that make sense?
Yeah, absolutely. Thank you for breaking it down even more.
Mhm,
So, obviously, there's multiple ways to come into this. You mentioned early on, you can come in, buy a facility that's already existing. You have built some from
mhm.
the ground up, right? So, what do you
Yep. Yep.
recommend typically? I mean, I would assume after you've bought one and you understand the operating expenses and the profitability, all of those numbers, you know exactly what you need to be able to
Yeah.
build the facility.
Mhm,
So,
mhm,
what do you see most people coming in and having the most success with, buying something already established or starting from
mhm.
the ground up?
Yeah. Well, if they're just starting in self-storage, the best way is to buy an existing facility, and that's because
Mm.
they can look historically at where it's been, still understand where the market is, and if they do their due diligence on all of that, looking not only to the past but also in the future and the current market being the most important thing, where our rental rates now compared to the facility that they're buying, they shouldn't step in anything. And all things being equal, as we just mentioned, the debt service coverage ratio is there, the appraisal comes in, and the lender approves of it, you're going to be in good shape. And that's probably the best, not probably, it is the best way for people to be able to get in, because if they're new to the industry, they're going to have a tough time, as I just mentioned, getting a loan if they don't have the experience. And so, backed by their optimism and their balance sheet isn't enough. They need to have experience. And so that's why it's more difficult for them to be able to get into a development project out of the gate. That being said, a development project, it's the ultimate value add. You start with a piece of dirt and then you put a building
Mhm.
on it, it's worth more. And then you put an income stream on it, it's worth even more. You just got to make sure that you've done your math, your homework, as well on the market and where you're going to take it. And then once again, it's just a reverse math problem that you work out to say, well, we can build a 70,000 square foot facility on this site, and the rental rates in this market are X. And at 90% occupancy, here's the amount of income that comes in with a 30% expense ratio, and here's what it costs to build it. We should be in good shape. And obviously,
Yeah.
those are the 5 easy steps. And there's modeling software that has another 100 pieces to that we analyze. But again, we can model it out pretty succinctly, as long as we have all the market data at our hands, and we know our contractors and how long they'll take, and the costs. And we're very successful on the development end, just because we know what we're doing on that front, and we have our ducks in a row and all the people in place at every step to be able to do that. That is a big risk. It's a heavy lift to develop a facility, go through that risk, the development risk, and then the lease up risk, and getting a bank loan on that the entire time if you don't know what you're doing. That's why
Mm.
most people starting out don't choose development versus buying an existing facility.
Yeah. Well, and all facilities are not created alike either.
No.
Like I've personally used storage facilities where I've spent very little and there's no air conditioning. There's very little
Yep.
upkeep and maintenance on the owner's part. And then I've also
Mhm.
gone to facilities that are much, much nicer. Do
Yep.
you, what do you deal in all of those? Do you own a little bit of all of those? Or do you kind of have a consistent value level that you
Mhm.
are willing to
Yeah.
invest in? I mean, you can look at, yes,
Mhm.
this might be a little low lift on the front
Yep.
end, but you're going to make a lot less income. So where do
Yeah.
you recommend, or do you
Mhm.
have students and people who come in at all kinds of levels
Yeah.
of storage quality?
I've invested in all, A, B, and C class facilities, and all qualities and sizes and markets. And as far as a recommendation, I would say that you need to buy as much as you can, as nice as you can, because the ultimate buyer of your facility later on, there's going to be a greater pool of folks that are interested in a nicer facility. If you're looking at just a 40 unit facility that's in a rural part of town, You're never, it's going to be tough. Never say never. It's going to be tough to be
Mhm.
able to create value no matter how much lipstick you put on it. If it's not a growing part of town and it's just an older, facility with gravel around it and just not very attractive and not temperature controlled, as you mentioned, there's only so much you can do and you won't be able to raise rates much in comparison to buying a class C plus or B minus facility close to the growing part of town or in the path of progress, and that you can add paving, asphalt where there was gravel, add a fence where there wasn't, add security systems, and change the doors out, put a professional office in place, or redo the office and put the technology in place that allows people to rent easier. And you'll be able to increase the value and increase rental rates of that facility. That's really the best way of doing it and approaching it.
Mm.
For what we're looking to do right now, is mostly Class A facilities, developing it from the ground up or taking something from a B and taking it to maybe a B minus to a B plus. And then we're scaling by growing a number of facilities in a particular market, and then we sell them off as a portfolio once we've turned them around, raised the rates, raised the occupancy, added those amenities, and then sell them off to the bigger players, the REITs or the hedge funds.
Mm. Cool. Okay, so if somebody listening right now is
Mhm.
trying to build up cash flow, is this something that you would recommend starting early on, or should you have a decent amount of cash flow to get started? I know you're getting funding, you have lenders and things
Yeah.
like that, but are we
Hmm.
looking at this more
Yeah.
of I'm building a passive income stream and I'm an entrepreneur running this as a
Yeah.
business, or more of an
Mm.
investment opportunity?
Yeah. I think you need to treat, well, the answer is always it depends, Christian, right? The
Mhm.
answer to every question is it depends. I think everybody has their own personal, situation where they're looking at what is cash flowing. Is it better than what they have? Are they looking to replace their W-2 or maybe a spouse's W-2? Do they want a little bit of walking around money? Just as long as the
Mhm.
cash flows are good with that. It really depends. And then, where you buy it, if it's a value add facility, what does it look like 30, 60, 90 days, 2 years from now in terms of the cash flow? Is this a stepping stone for that? So there's a lot of questions, that need to be answered in the meantime. But I would say if you should always be looking to increase the cash flow, it should be cash flowing from day one. That's just kind of our,
Mhm.
our mantra here within our education company. I don't think you should ever step into a project where we say, well, I'm going to feed it for a little while, but at least I got one under my belt. That's when we hit the red button and say, okay, hold on, folks, let's take a look at this again. I don't think that's ever a wise decision to make unless you're coming in with a partner and or you're getting a lot of money and it truly is a turnaround that's only 50% occupied and there's an owner situation that caused it to be at that place. Otherwise, it should be cash flowing from day one and the ability to increase the cash flow significantly so that you never get caught out with interest rates or any changes in the market.
Mm. Okay. Good to know. And because, we have a lot of different types of listeners who are looking for anything from a side hustle to a long term
Yeah.
investment, to build up their
Hmm.
retirement in a different way.
Yeah.
And I'm all about the passive income approach where, yes, you
Hmm.
have to do a lot of front end work to make sure it's a sound investment, know your numbers and all
Yeah.
of that. But we're not
Hmm.
talking about going into this. You're not operating all of these storage facilities. Like you have all
No.
of those expenses
Mm.
built in.
Yeah, we've got all that handled with management. We have our own internal property management in a number of our facilities. We hire third-party property managers. But in the very beginning, it was my wife and I, until you
Mm.
get to that place where you either have a large facility to be able to hire a management company or a number of facilities, then you are doing it yourself. And when I say yourself, you're probably still overseeing somebody. You're going to hire somebody behind, the counter. You're not going to be in there because, yes, you are an investor, but that doesn't mean that it won't cash flow even if you put somebody in there. And we have some folks that that come through our self storage academy, and that is what they want to do. They want to be able to work a few days a week and maybe have a part timer at their business, and maximizing it. And that this is a retirement gig, or they're going to do this a little bit at their first facility that gives them the experience to then buy number two, three, four, and five right away, and they
Mm.
still spend a few hours in the business. It's flexible enough. There's enough cash flow that allows folks the option if they want to work in the business rather than on it, they can do so. But as Michael Gerber says in the E Myth, we try to free up time to work on the business rather than in the business, and so that's what
Yeah.
we teach our folks as well.
Cool. How many facilities does your average student own? Like for a pretty healthy
Mm,
portfolio, I mean, I know we can go
yeah,
really high, but the
sure.
average person, what are they looking at in terms of ownership? And do all of those people own facilities in their actual place where they live? Or do you have people who are investing and
Yeah,
buying things outside of their home state?
yeah, yeah. Good question. We will stress in the beginning, and we did this as well. I would say within a 2 hour drive is what you should be targeting in terms of your
Mm.
market reach. So you're sending mailers out. You're calling the owners. You're working with the brokers, telling them, this is what I'm after, whether it be value add or if it's not a value add. If you just want something that just throws off cash without a lot of upside, just determine what your buy box is and your acquisition criteria. And I would say within 2 hours, you're going to be able to find something, if not multiple. So I think
Mm.
it starts there. That is the first approach. Our students, the way that what we show them and how we teach them is, there's a lot of deals out there, if you want to call it deals, but we call them opportunities. There's a lot of opportunities out there that aren't necessarily deals. And we show them either how it turns into a deal by the work that you do, or whether it's a deal right out of the gate. And for us, our average, when our students get into a facility, the average, yes, there's high and low end, is about $10,000 a month in positive net cash flow, the way that we teach it and show folks how to get into the business. And certainly there's all types of other ways to get into the business without that. And so then the question becomes, Kirsten, for you or anybody else, well, how many do I want? 120 grand a year is, that's walking around money. It's some extra money. It's builds up a retirement. You get two facilities and you're sitting at now 240. Is that enough to bring somebody home from work and not collect a W-2 anymore? Maybe, maybe not. When you get to 3, then maybe that is. When you get to 5, okay, now the money looks a little bit different. And so that's when for us, it becomes a business. And so,
Mhm.
when you've got, $600,000 a year coming in, some people are going to live off that if they want to. And we teach our folks to be a little better stewards, if you will, and to treat it like a business. And you're going to hire some staff and you pay yourself, but that gives you fuel to grow. And then also really builds up your retirement and allows you to do some other things. Our model is built around getting people launched to where they got 5 facilities. They're bringing in 600 grand a year. And then they get to decide, what they want to do after that. But we built the framework. We show them, here's the people you need on your team, because it is going to be a team at that point. It's not just individuals anymore. And we open up our network, our Rolodex of folks to help them to build that out so that they're not left to the market to try to find those right people that they can trust and do a good job.
Yeah. So I would assume that, because you talked about lending, and I know eventually you can do private equity, you can have more of those private investors to
Yeah.
buy those properties. But when you talk about scaling, are you using much of that cash flow from property one and investing that into property two? Or are you still always just
Yeah.
relying
Usually
on
not.
the financing?
Yeah.
Okay.
Yeah,
You're
usually
keeping
not.
that.
It's just a one-off. Yeah, exactly. Everything is, we don't pool within our own portfolio necessarily. We do have funds,
Hmm.
a fund where we blind pool funds where we bring in private equity to those. But in the beginning, they're just special purpose vehicles, SPVs, single assets, single entity LLCs, and they have their own
Mm.
profit and loss statement, and they don't trade money back and forth. Now they can make loans if they need to or want to. One of your properties and your portfolio or company can make a loan to the next, but we typically don't do that, just to keep the numbers a little more clear. And again, the end goal is, well, they got to stand on their own first of all, and the end
Hmm.
goal is to sell to as a portfolio to somebody else. And if you get all these intercompany loans back and forth, they're just like, well, is this thing profitable or not? Or what, tell
Yeah.
me what this was about. You borrowed from Peter to pay Paul, or was it just to buy this? And just, the cleaner the balance sheet and the P&L statements, the easier it is to be able to refinance and to be able to sell eventually.
So when you talk those numbers, is that pretty typical when you have a pretty good profitable? Are we talking 90% filled storage units? You're looking at a
Yeah.
good $10,000 a month. That's kind of the
Yeah.
anticipated
On
goal
average.
for a unit.
Yeah, that's kind of our median. Many of our folks, our students, and our own deals are much higher than that, and some are a little bit lower because some folks do start. We've got a friend of mine in the business that I met through another circle. He and I were on. Well, I was on a Zoom call with his 10-year-old son earlier today, and so he's looking to buy a smaller facility, and he's going to have a little smaller flow in his, maybe 2-3 grand a month. And there's some other folks that want to get into the business, and they are in a rural area and they want to own close to them. And so that's the case. But other
Mm,
folks, depending on the size and the market they're at, they're, $15,000-$20,000 a month on one facility. Just it really depends.
wow. Okay, cool. So when you do step into a unit, and I don't want to use the term
Hmm.
flip because you're not just
Yeah,
enhancing it to necessarily sell it, but when you are
correct.
increasing the value,
Yeah.
how do you fill more tenants? I mean, yes, you might
Mm,
increase the property's value, but what does the
yeah.
marketing look like? What does the sales look like to be able to fill that up, especially if you're coming in with poor management beforehand, you have some things to fix. But even
Yeah.
if not,
Hmm.
like what is usually the
Hmm.
strategy that you
Yep.
have people go through to fill those up?
Yeah. Typically, when they're not, the reason why the occupancy is low is they're not using tech. And I mean this not in a derogatory way, but the mom and pop owners, if you will. There's many of them that are at retirement age and that own these facilities, and they haven't even bothered to get a website. Or if they do have a website, they're not maximizing it. They're not optimizing keywords. for SEO. They're not actively writing blogs or doing anything that allows the algorithms to be able to find them when people are searching for storage, within that market. We're doing lots of geo arbitrage and marketing so that we can be found when people are searching. We're really good at beating our competitors and getting in front of them with
Mm.
the tactics that we're using online. I mean, the game is won right here on this. This is a commodity. People aren't looking for school systems. They're not looking for neighbors or neighborhoods. They're looking
Mm.
for a place to store their stuff that is close by, that is neat, clean, safe, and secure. And so the facility needs to be that when somebody shows up. The landscaping needs to look nice. The buildings need to look nice. There's security all around. They walk in the office. They see, the big TV with the multiplexer and all the cameras on it. And the person behind the counter, isn't wearing a white beater tank top and chomping on a cigar. They're professionally dressed. They stand up. They greet the person. It's a professional organization, and that's who wins the game. But all of that can be portrayed online. When somebody looks at the site and then they look at, again, hopefully the person behind the counter or somebody like them. But all those other things, it makes it easier for them to say, "All right, done," and they click a button and either they reserve a unit and come down and finish it, or they complete the transaction by way of their phone or their
Mm.
iPad or their laptop. And the quicker and the easier you can get them to make that buying decision, which they want to do, they want to check this off their list of things to do that day. Well, that's how you win. So
Mm.
there's a whole lot that goes into it to begin with, to be found online. But then to the extent that you utilize the technology that's available to allow them to rent a unit in a matter of minutes, that's how you win this game.
Yeah. I'm just thinking, hearing you say that, I've had several guests on lately who find that little gap that's missing. Maybe
Hmm.
you're bringing that
Yeah.
digital marketing skill set to
Yeah.
a business that is
Yep.
historically just not online, not technical. And so I
Yeah.
think there's even a gap there if you're not quite at a
Oh, yeah.
position where you're
Of
ready to
course.
invest in a property, just come in
Hmm.
and help one become more
Hmm.
profitable
Of
with
course.
that skill set.
Yeah. If you're an AI specialist that's helping folks who set up their sales funnel, the bots are getting really, really good. And, there's not many questions. There's not many steps to renting a unit, and the bots can walk through this. And so we've got platforms, Jane AI is one of them. And there's others out there that are doing a really good job of acting as if they're talking to a salesperson within a call center or
Mm.
just a live person and marching them through that process. And it's, you'll be able to tell, that it is AI, but my gosh, it's leaps and bounds ahead of, just those type in chats where somebody's there. And in some cases, it's better than the folks that I've talked to on the phone. So,
Yep.
yeah, it is working.
So you'd say that's probably one of the biggest differentiators right now in units and buildings that are successful compared to those that are still just kind of either unfound and they've been able
Hmm.
to rest on their location for a
Yeah.
little while. You're seeing that being the thing you probably need to spend a pretty good amount of energy on. Obviously a good
Yeah.
clean facility, but then the
Right.
visibility
Right.
online and
Yeah.
that customer experience.
Absolutely. The customer experience is one, but that's the conversion part, the traffic part, being found, when people are looking for self-storage. I think that's the biggest piece right now until everybody catches up and everybody understands how to utilize AI for SEO and the geo arbitrage. We're able to almost literally funnel traffic onto our website, but we know
Mm.
that won't last long and the algorithm changes and we won't have that competitive advantage very long, but we are one of the few that are really doing it and doing it at scale. And so just in doing it for a fraction of the cost that we used to pay our old ad agencies and marketing agencies. And that goes for any
Mm.
business, but especially for self storage, we're just our folks are killing it.
Cool. Do you factor that in when your people are looking at acquiring a property, do they factor in
Hmm.
the current SEO of the property? Like, is that a value add? Is that maybe an opportunity that you're
Hmm.
looking at of, oh, this could do better
Yeah.
because they're not creating that digital footprint?
It is only to the extent that this facility that we're looking to buy is at 60% occupancy, and we determine that the balance of the competition in the market is at 85, 90%. Then we know it's a marketing issue. If
Mm.
they're, unless the pricing is wrong or just, it's way out there or nobody's answering way out there, meaning, far out from town, or nobody's just answering the phone. There's no traffic and there's no conversion, period.
Mhm.
So yeah, we can pretty quickly assess, what's going on the front end. What does their funnel look like? And if it's broken, a quick search online and a phone call to the site will tell us. We'll
Mm.
know whether they're doing things right or not.
And that can be such a quicker, easier fix than even
Oh,
upgrading the
absolutely.
property.
Less than 30 days, and we've got all the back end built before we even close on the property. So we're ready to turn when we turn the switch. We're ready to go.
Yeah, so those are the deals you ideally like, it's probably the diamond in the rough that you find where
Yeah. Yeah.
Everything's
Yeah.
functioning well. It's just a marketing gap, and you can come in and solve that and immediately become more
Yeah.
profitable. Cool.
For the most part, yeah. Usually if they're lazy in their marketing, they're lazy in their maintenance in some other areas. So there's some other cleanup, but yeah, essentially you're correct.
Yeah. Okay. Cool. Anything else that you would recommend people to know if they're considering this, getting into this game?
Yeah.
Some of the things that people don't necessarily consider. What are the risk factors? I know it
Yeah.
sounds, on the outside like this is kind of a low fail business model, but what things do
Mhm.
people need to
Mhm.
mentally prepare for?
Yeah. Well, you just mentioned it because it sounds like, and I make it sound like a low fail business model. And so, what people need to prepare for is they need to learn the business. And
Mm,
yes, that's coming from somebody who has an education business, but also from somebody who's seen a lot of people fail because they didn't educate themselves and they think it's a simple set it forget it business and nothing can go wrong. It has the lowest loan default rate. I'm not an idiot, so I'm sure it'll be fine if I just buy it and
mhm,
everything's going to work out great. What could go wrong? I think that Kirsten is, and you've seen this. You're educating people as well, and I think people coming into it not doing their due diligence and just assuming that everything's going to be great without learning and understanding and truly. I mean, it starts at every step of the way, but essentially the market is the market strong, and did you underwrite it properly? The
mhm.
real estate math behind the analysis and running the numbers on something. That's where not many people are strong, and so they just say, "Well, I got the broker's numbers and it looks good, and he says it's good, so I'm just going to move forward." And garbage in, garbage out. Just you've got to understand the business. You got to be a student of the industry first. Grab a partner to get into it if you're struggling, or if you recognize that you have that blind spot. But at the end of the day, just you got to educate yourself before you just jump in.
Yeah. And speaking of education, how
Hmm.
long ago did you start the education portion of your
Yeah.
business, and where was that really born from? And I mean, I know most service businesses are born from too many people aren't getting this right. We have this
Yep.
system that we
Right.
know is like rinse and repeat. People can come in and actually have success. But yeah, how
Hmm.
long ago did that launch, and
Yeah.
what's that looked like?
Yeah, so that's 2007, and it was I never set out to be any kind of guru or to be running the nation's largest self-storage education company. That was really the last thing because I like to invest. I do like to
Mhm.
teach people. We enjoy that. We like to see their success, but it really started back when I was getting some success in Indianapolis here, and I was the president of the Central Indiana Real Estate Investors Association. And so a lot of people were asking me, well, tell me about self-storage, teach us about self-storage, and wanting to go to lunch and pick my brain, in air quotes for those that are just listening. And I didn't have enough time for all the lunches. And then some folks didn't even pay for lunch. They made me pay for my own. And
Mm.
one guy actually I paid for both because he didn't have any money. So I said, enough's enough. So we did a workshop to teach some people about it. And so, yeah, the second piece of that, Kirsten, is what you're alluding to. And that is, the market operates better.
Mm.
If there's a bunch of uneducated investors throwing around stupid offers, high offers on properties, it makes it difficult for the rest of us. Or if they just really mess things up, or they don't understand what they're doing, and they make a bad name for us self-storage investors, to the brokerage community or to the city. We needed folks just need to be doing it better and doing it right. So that's where I stepped in and began educating folks in the market. And lo and behold, it worked. And yeah, long story short, then some folks took an interest in that. Some of the agents, the speaking agencies that booked educational speakers throughout the country at other groups like ours. And so I went out and started speaking and selling then our home study system, which is the package of that workshop. And it took off from there. And so, yeah, then I found myself with two 60-hour a week businesses trying to manage. But we were able to successfully over the years morph the two together so that the education business actually became lead flow and deal flow for us to be able to
Mm.
partner with some folks and to do some wholesale opportunities. If we teach them how to underwrite correctly and find deals, not opportunities, but truly deals, then they can enter our network and sell them, wholesale them back
Mm.
to our network of investors and even to myself. And so we created the largest education company, but we basically created the largest network for people to buy and sell properties in the country without any under the radar of everybody else. I mean, nobody knows that we trade more properties than the largest brokerage firms out there, period, just because our community is the largest.
Wow. It just shows the power of strong education and a strong
Hmm.
foundation and how far that can
Yeah.
go. And I love that you said
Hmm.
that because we know that the people who are in our community are trained well, they know how to underwrite, they know what to look for, then it's so
Hmm.
much easier for you to make those sound investments. And you
Absolutely.
you just employed a bunch of people who came to you and learned, paid you to
Yeah.
learn, and now they're bringing you
Sure.
opportunities. I was going to ask that
Yeah.
next, like how has it kind of changed your interaction in the market? And it sounds like you've
Hmm.
got students making deals with each other. Like
Yeah.
it's just such a great networking
Hmm.
place for people to continue to grow and make money.
Yeah, it's the education company that really requires you to do a lot of marketing to be, an influencer and, the authority in the industry. And so, we just begin to teach online and then sending other messages and master classes and things out on YouTube and elsewhere. And so then, yeah, we just became more well known as a nation's leader and leading company for that. And so it was really just the marketing for the education company that then opened the other doors, which allowed me to raise even more capital because
Mm,
weird to say it, but I am the guy, and that's we've been
yeah.
out there longer and have a longer and better track record than anybody else out there, and so it allows us to raise capital easier. And so it really is, yeah, the benefits it just have continued to come. It's just the gift that keeps giving. The two businesses work in tandem with each other.
Mhm. And from a student perspective, like, such confidence to be in that space where
Mm,
you are learning
hmm.
from somebody who's done it so long and has such a
Yeah.
strong track record, and to be able to
Hmm.
collaborate with other people who have all been trained the
Yeah,
same
that's
way,
the
who all
main thing.
understand it.
Yeah.
Yeah. That's huge.
Yeah, so we began to teach people, and then we had a mentoring. We still have a mentoring program, but then we also have a mastermind, and so those are the folks that are growing and scaling and getting up to that 5 plus. And some of those folks are really building some big businesses, and then that's where the collaboration and the networking and the trading off and raising private equity and doing lots of bigger deals together.
Mm.
That's what excites me. That's my true calling and my skill set and my where my superpower lies is just bringing all those things those pieces together. But it never would have started without teaching people how to get in the first place.
Yeah. Amazing. I think people listening, this is great to hear both sides of the equation. I think you never know what things can compound and add up to, and that
Yeah.
there's going to be that opportunity to go to the next level where, yes, you have the deals, you have the skill that you've first acquired. But I'm
Mm,
like you, I love now bringing people along for that journey. And there's a
mhm.
whole other level there. And
Yeah,
it's
yeah.
expansive in more ways than just financially. And just start with something, right? Like if it's starting
Yes,
with self
yes.
storage, if it's starting with a
Mhm.
business that, anything, and know that there's always gonna be room to expand and
Yeah.
grow upon that. So
Mhm.
you're a
Yep.
walking testament of that. It's amazing.
Well, we've been at it for a little while, so.
Yeah, just a little bit. Where's the best place
Mhm,
for people to connect if they wanna learn more about joining any of those
mhm.
trainings that you have, joining
Yeah,
your community?
yeah, sure. Selfstorageinvesting.com, selfstorageinvesting.com. Try to make it simple. It's a long word, but
It's
it's the
pretty
basics and
straightforward.
and yeah, all kinds of free information, resources, white papers, you name it, and then information about our live events and our mentoring and our. We do have a live event coming up in Seattle, not too far from now, as well. And then our mastermind has been ongoing. It's the oldest and the largest mastermind in self storage. But out there, we meet 4 times a year, and then we meet twice a month after that. And so those are folks that are looking to grow and scale. So if there's any self storage investors out there that are looking to get plugged into a community, that's where the magic happens as well.
Cool. Thank you so much for sharing that. That was like a
My pleasure.
speedy, just power packed loaded masterclass.
My
Thank you
pleasure.
so much.
My
All
pleasure,
right.
Christian. Thank you.